Frankly speaking, most startup ideas people are nurturing are completely worthless. Statistics show that over 90% of startups fail, and the number one reason isn't lack of capital, a weak team, or flawed strategy. It's this: the initial idea was fundamentally wrong. More brutally, many founders only realize this after losing hundreds of millions, or even their youth. Think you have a great idea? You might be deluding yourself. So where do truly unicorn-worthy tech ideas come from? From flashes of genius, or from a process that can be learned and applied? How do you spot a gold mine before others exploit it? So what's the secret? Mindset? Methodology? Or just luck? If you've ever asked, where do million-dollar ideas come from? This video will bust common myths and give you a perspective most startup founders wish they had known earlier. Part 1. 3 common traits of great startup ideas. Great startup ideas don't sparkle like gold at birth. In fact, they're often mocked, doubted, and rejected by both investors and the startup community. But that's exactly the signal. It might be a breakthrough. Wisdom lies in recognizing 3 immutable traits of ideas that can build billion-dollar companies. Right timing, misjudged by the crowd, and an actual market size larger than it seems. Those who spot them early will break ahead of the entire market. A common fallacy in the startup community is, to build big, you need a big idea from the start. That leads many into theoretical traps and logical ruts. They try to sketch macro models, follow trends, chase markets, but overlook one core truth. All successful startups start small. What they had wasn't a telescope, but the ability to feel a painful problem and the courage to solve it even when the world says it's stupid. The first trait is golden timing. The idea may already exist, the product may already be out there, even competitors may be dominating the market, but only at the right time, with the right trigger, in the right environment, will the opportunity truly explode. Leading companies aren't early by time, they're early in insight, knowing when technology is ripe, when users are ready, and when outdated products are pushing people away with bad experiences. The second trait: everyone thinks it's a crazy idea. This is not an exception, it's a rule. Any breakthrough that gains broad consensus from the start is not novel or unconventional enough to ignite real disruption. Founders who can hold their belief amid skepticism, who can hear the call from the future despite current opposition, these are the ones who succeed. The crowd's doubt is not a barrier, it's a compass. The third trait: the real market size is always bigger than initial estimates. Many young founders don't realize this. They trap themselves in Excel slides and TAM, SAM charts, while the real market harbors layers of unmet needs that no one has measured. A good product that solves a core pain will create a new market as users discover new ways to use it. Opportunity comes from listening to users, not forecast charts. When you combine all 3 elements, perfect timing, a contrarian view, and underestimated market potential, you're holding a raw diamond. But that's not enough. The rest of the journey requires perseverance, aggressive execution, and relentless learning. The next parts of this analysis will peel back the structural layers, thought patterns, and action strategies that help startups turn ridiculed ideas into global icons. Great founders don't go looking for a good idea. They look for a broken reality that needs fixing. They don't sit at a desk scripting million-dollar startups. They go to the field, immerse themselves in users' pain, and build solutions so good that people can't ignore them. That's the starting point. And when rejected or ridiculed, they don't back down, because they don't need everyone's approval. They only need a few early users to feel saved. The biggest difference between the successful and the ones always waiting is action grounded in belief. No one handed them a map, no one guaranteed the right path, but their inner clarity, their deep connection to a problem they lived through, made it impossible not to act. So stop obsessing over the right idea. What you need is a problem you can't ignore, an injustice you want to fix, and the courage to be the only one who moves. Part 2. The right timing, when old products are outdated, but the market lacks a worthy replacement. In every success story, timing is an inseparable variable of victory. The same idea may appear in many places, executed by many teams, but only one breaks out. Why? They acted at the right moment. Not too early to be forgotten, not too late to face a saturated market. They entered when users were tired of the old status quo, when technology could finally support the solution, and when consumer behavior began to shift. In the housing sharing sector, early versions of the product already existed. There were platforms to find short-term rentals, sublets, or even couch surfing for free. But no platform brought together all three key elements: seamless experience, integrated payments, and a level of trust strong enough for strangers to feel safe. That was the gap. No one fully addressed it. When one team came along and nailed all three, the market didn't need convincing, it opened itself. In crypto, users already had demand, but they were stuck with shady exchanges, complex deposit processes, and buying experiences that felt like black market trades. They didn't need another exchange. They needed a legitimate, trustworthy, and convenient way to buy, like ordering a book online. When a platform appeared and turned buying Bitcoin into a simple action, that was the perfect timing. Not because it was a new idea, but because it was executed at the right moment. In online payments, systems had existed for decades, but anyone who tried integrating payments knew it was torture. Fax documents, personal escrow, 30-page contracts, fraud checks, and 3 months to go live. There was no shortage of companies doing this. But who dared say, with just a few lines of code, you can get paid today? When a team made that promise and kept it, they didn't need marketing. The market came to them. Timing isn't coincidence. It's the result of deep observation of real experiences. When users complain too much, when social media overflows with dissatisfaction, when dev communities start building their own hacks, that's not just a signal. It's an invitation to act. But most ignore it. They think the product already exists, the market is saturated. Visionary founders understand when everyone is fed up, that's when the 10x improvement opportunity is at its peak. The key point is, you don't need to invent something brand new. You just need to recognize users' fatigue, the feeling they're waiting for something better. Then, pour all your resources into delivering that, not just 5% better, but noticeably better. So good that users can't go back. When that happens, you don't just have customers, you have a movement, an irreversible migration wave. The right time is always tied to major shifts, economic crises, new technologies, or consumer behavior reversals. A recession may make people willing to share apartments for extra income. A new tech can lower costs enough to unlock entirely new markets. These shifts are the bedrock of startup timing. The one who sees them first wins. The one who waits for perfection gets left behind. You don't need to be the first with the idea. You don't need the strongest team. You don't need huge capital. What you need is to step in at the right time, when users are fed up with outdated solutions, when the market is ripe for change, and when you're ready to give them something entirely different. All great things start with a single moment, when a small group says, "We can do this better," and then they actually do it. Beyond just choosing the right time, another accompanying factor is the market's readiness to accept change. Sometimes, a new solution doesn't need to be highly advanced in technology, just timely and able to serve a need no one is addressing. This happens when users start recognizing the frustration of current options, but haven't found an appealing alternative. That's when a new, simple product, aimed directly at the pain point, can dominate demand without any massive marketing. The market is always ready for something that makes life easier. Part 3. 10x improvements that make all the difference. In every breakthrough journey, the factor that separates ordinary improvement from revolution is the magnitude of superiority the new product delivers. Not just slightly better, not subtly different, but a clear, unmistakable leap, 10 times better. Only this level of improvement can make users change behavior, abandon old products, and embrace a new experience. The following examples are proof of that. In the home sharing space, the new product didn't just change how people rented accommodation, it overturned the entire process. Previously, users had to communicate by email, pay in cash, and blindly trust strangers. Eliminating in-person payments and integrating online transactions into the platform created a leap in trust. Trust was no longer based on gut feeling, but on a clear, transparent, and protected system. The next breakthrough lay in the business model. Instead of charging hosts to list properties, the new product allowed them to join for free, rapidly expanding supply. While old competitors saw hosts as customers to extract money from, the new model saw hosts as assets to be nurtured. This strategy led to an explosion in available listings and built a competitive edge nearly impossible to replicate. No listing fees, more supply, more options, more users. User interface was also a 10x improvement. Old platforms were clunky, outdated, and inconsistent. The new product optimized the entire experience, from how descriptions were written, to images, maps, identity verification, and a booking process requiring just a few steps. Users needed no instructions, just intuition and a sense of trust. This seamless experience turned the product into a new way of living, not just an intermediary tool. In the cryptocurrency field, the most important breakthrough was turning a complex journey into a single action. Previously, buying Bitcoin meant transferring money abroad, using shady exchanges, or risking being scammed. The new product let users buy instantly with a local bank card, in minutes, through a shockingly simple interface. All worries disappeared. Users didn't need to learn blockchain, they just needed to click buy. Additionally, the product eliminated risks of losing money to hackers or bankrupt exchanges. By prioritizing security with trustworthy storage, two-factor authentication, and transparent support policies, the new product became a fortress in an unstable world. This wasn't a technical detail, it was the reason millions chose to use it. A secure solution doesn't need ads, it spreads on its own, like a survival instinct among consumers. Another profound improvement was realizing the concept of digital gold. If you ever believed physical gold was a safe store of value, the new product offered a superior choice. Easier to buy, easier to carry, impossible to lose, and not tied to geography. It wasn't just an investment vehicle, it was a symbol of digital financial freedom. From there, the entire concept of personal assets was rewritten. A shift in value systems occurred. In the online payment space, the biggest improvement was shifting control into developers' hands. Previously, to integrate payment, you had to go through engineering, finance, and bank partners. The new product said, "Are you a developer? We're here for you." With APIs as elegant as poetry, documentation as clear as a textbook, and integration in just a few lines of code, developers could finally add payment functionality to apps within an hour. Beyond technicalities, the product also made a strong emotional impact. When developers accessed the docs and saw everything written in their language, addressing their exact pain points, supported by an active community, they no longer saw it as just a tool. They saw it as an ally, a weapon, a part of their project's identity. That's why the product wasn't just a choice, it became a default standard in the dev community. And most notably, the product was not cheaper than the market. On the contrary, it was more expensive. Yet users flocked to it. Why? Because they weren't just buying a service, they were buying an experience, peace of mind, and control. In a market where old solutions were cheap but terrible, a costly but worthwhile one became a symbol of innovation. That's the sign of a true 10x improvement. When customers pay not because they're forced to, but because they don't want to use anything else. Part 4. Ideas come from personal problems, not whiteboard brainstorming. Most people believe that to come up with a great startup idea, you need to organize a brainstorming session, flip through trend reports, or analyze market data. But reality shows something entirely different. The best ideas often don't come from meeting rooms. They come from deep lived experience, where real pain exists, a difficult situation, a problem with no solution, a moment that forces someone to take action. In one case, the idea wasn't born from wanting to start a business, but from being unable to pay rent. Room sharing was conceived as a survival tactic. No market strategy, no financial model, just a simple need: how to make extra money from the room you live in. That sense of urgency was the real value, because it was a real need. A product created not to go viral, but to help its creators survive. In the crypto world, someone once tried to buy a little Bitcoin out of curiosity, but what awaited them was an anxiety-ridden process. Transferring money overseas, dealing with shady websites, fearing loss, no clear guidance, no customer support. Just a few such attempts were enough for someone with user experience awareness to realize this is chaos, and no one is stepping up to make it simpler. So why not do it yourself? That question was the starting point. A tech founder had built several side projects. Every time they needed to integrate payments, the complexity crippled the project's momentum. It wasn't just about paperwork. It was the feeling of being shackled, unable to create. That was no longer just a technical difficulty, but a psychological barrier. When no one in the market offered a quick, clear, developer-friendly solution, the urge to build a new tool became inevitable. From those experiences, one thing is clear. Successful products don't start with theory. They start with frustration, with burnout, with facing something so broken you can't tolerate it anymore. That moment when someone says, "I can't do this anymore," is where real startup ideas are born, not in PowerPoint, but in a surge of conviction stronger than the fear of failure. The advantage of solving a personal problem is that no one understands the customer better than someone who's lived through it. No interviews needed, no surveys. Every detail is embedded in memory. The worries others can't see have been felt. That makes the first version of the product, though rough, deeply resonant. It may not be pretty, but it's accurate, and the market senses that. Truth grounded in reality, not drawn from a blueprint. Most startup ideas are deemed mundane because they stem from everyday issues. But it's exactly that ordinariness that connects with millions of others. No one thought sharing an apartment was revolutionary. No one believed making Bitcoin easy to buy could build a $100 billion company. But once the product launched, people who had faced the same inconvenience instantly understood. This is what I've been waiting for. The market doesn't need education. It needs salvation. The traditional mindset is, pick a large market, then find a suitable idea within it. But a more effective approach is, find a real problem that once tormented you, then throw everything into solving it. Large markets are often crowded with competitors. Meanwhile, a personal pain point that no one has solved yet is a niche opportunity that could unlock a new market. Moreover, empathy with users will be exponentially greater. When the solution comes from personal need, the first user is the creator themselves. You don't need to search for early adopters. They already exist in your community, in your network. People with the same problem will find you, and this helps the startup survive the early stage without advertising. They have something more valuable: the trust of people who feel understood. There's no stronger way to build trust than helping others overcome a pain you've overcome yourself. Part 5. Extremely simple products that solve one core pain point. In the startup world, there is a common mistake, believing that a product must be feature-rich and grand in order to attract users. But in reality, the opposite is often true. Products that go on to become unicorns usually begin with just one thing: solving a clear, urgent, and specific pain point in the simplest possible way. No massive dashboard, no dozen features, just one action, and it must work. A home-sharing platform succeeded when the booking process was simplified to the point that anyone could complete it in under a minute. No negotiations, no phone calls. Select, book, pay, done. This simplicity didn't just save time, it increased trust. Users felt they had control over everything. And in a world where complexity breeds anxiety, simplicity is the strongest generator of safety. A crypto buying platform began with an almost minimalist interface. No candlestick charts, no order books, no jargon. Just enter the amount to buy, choose payment method, and press the button. That's it. It didn't try to educate users about blockchain. It didn't require technical knowledge. The mindset was, let the product do all the explaining. When users understand easily, they feel confident. When confident, they take action. A digital payment platform was built on a single promise. With just a few lines of code, you can start collecting money. No need to call the bank. No need to wait for approvals. No need to read a 30-page contract. With an interface designed for engineers, everything felt logical, streamlined, and practical. That's why the product spread like a virus in developer communities. No one was interrupted. No one was frustrated. Simplicity became the ultimate competitive weapon. The remarkable thing is, simple doesn't mean basic. Behind the clean interface lies a complex system, cleverly wrapped. But users don't need to know that. All they need to feel is, I just did something in minutes that used to take weeks. The finesse lies in hiding complexity, to preserve a clear, intuitive, and trustworthy experience. That's why users come back and then recommend it to others. The one-button product mindset is not an exaggeration. It's a standard for measuring how deeply you understand the problem. If you can't boil your solution down to a single action, maybe you're doing too many unnecessary things. The best products in the world start with one thing, one core function, one key action, and doing it so well that no one wants to return to anything else. One reason early products need to be simple is so that founders can clearly hear their users. If there are too many features, you won't know what truly creates value. But if there's only one, and users return, share, and love it, then you know exactly you're on the right track. Simplicity isn't just a user advantage, it's a strategic advantage in early product development. Modern markets don't lack tools, they lack solutions. The difference between a technical tool and a real solution lies in the ability to immediately address a specific pain. Users don't need more features, they need results. When a product can deliver that, even with just one button, they won't leave, they won't compare, they won't bargain, because what they receive isn't a function, it's liberation. The early success of many startups comes from not trying to do everything, but doing one thing really well. That clarity makes the message spread powerfully. Users understand it, remember it, try it, and tell others. Simple products spread not because everyone can use them, but because everyone can instantly grasp what problem they solve the moment they see it. That is a growth strategy that requires no marketing budget, only sharp insight into the core pain. Part 6, Going Against the Grain, Misjudged by the Majority. Any idea with the potential to change an industry will go through a phase of being terribly misjudged. Not because it's truly bad, but because it diverges from expectations, experience, or the current norms of perception. That very difference creates social friction, when people label the idea as stupid, dangerous, or unrealistic. But the truth is, the most ridiculed ideas are often the ones that are simply right. Before the rest of the world catches up. Imagine proposing a service where strangers sleep in each other's homes. At the time, the initial reaction wasn't excitement, but fear, doubt, and discomfort. Who would want to share their living space with a complete stranger? Who would trust an unknown platform enough to open their home to unverified guests? These are fair questions, but they're also psychological barriers that only a truly differentiated product could overcome. Even worse, the idea was seen as immoral. In an era when the sharing economy emphasized non-profit ideals, monetizing room rentals was viewed as greedy, culturally destructive. The founders were seen as money-hungry, out of touch with community values. But what they were really doing was creating a new economy, where people could monetize idle assets to improve their lives. The value wasn't in philosophy, it was in economic empowerment for millions. In the crypto space, the backlash was even harsher. It was an industry associated with scams, crime, and financial bubbles. Media was flooded with negative stories. Anyone wanting to build a company in that space was seen as a dreamer or a reckless gambler. The idea of making Bitcoin transactions easy was considered dangerous, unrealistic, and unscalable. The truth was, people couldn't see the real demand because their judgment was clouded by bias. Even the founders themselves once doubted the product's true potential, because the feedback around them was overwhelmingly negative. When family, friends, and investors all say it's a death trap, it's hard to stay confident. But what kept the pioneers going was this. They had been victims of the old system. They knew the pain. They believed there was a better way, and that belief was stronger than the fear of ridicule. They believed in the problem, not in praise. With payment platforms, skepticism came from many angles. Young founders, no finance experience, tightly regulated industry, legal hurdles. Approaching large banks to request system access was practically mission impossible. The question from investors was, if this is a good market, why haven't the big corporations already done it? But that was exactly the gap. When giants move slowly, agility becomes the small player's superpower. A repeating pattern is doubt from experts. At pitch meetings, new ideas are often compared to existing models. This is just a clone of X. How is it different from Y? Z already did that. But those reactions show that they're evaluating a new idea using outdated frameworks. And when judged with obsolete tools, innovation is always undervalued. The real difference isn't in features, but in the approach and the emotion users receive. Additionally, investors often dismiss products that serve user groups they don't understand. If they've never had to rent a cheap apartment, never bought Bitcoin, never integrated a payment API, they can't grasp the product's value. And so they conclude, no one needs this. But the issue isn't the product, it's the narrow perspective of the evaluator. A product only needs to serve a group that genuinely needs it, and does so well to be breakthrough. The market doesn't need everyone to agree. It only needs a small group of people who strongly believe and are willing to pay. If the product is made right for that group, the rest will follow. Those who mocked it will become customers. Investors who said no will line up to fund it. Experts who dismissed it will rewrite their analysis. Startup history proves the crowd is often right in the short term, but they flip quickly when reality changes. Remember, if everyone around you thinks your idea is too crazy to work, it might be a sign that you're ahead of your time. As long as you understand the problem clearly and know what you're solving, stay the course. Truth isn't measured by consensus, but by your ability to create real value for real people. And when that value is strong enough, every insult becomes proof of the difference you're holding. Part 7. You don't need to be first. You just need to be the best. There's a dangerous misconception in startups. Whoever comes first wins. Reality proves the opposite. It's not the first in the market who dominates, but the one who understands the problem most deeply and solves it best. Novelty doesn't lie in being early, but in the level of improvement. Doing what others have done, but with more depth, more finesse, and far better execution, is the path of breakthrough startups. In the home-sharing sector, early platforms had been around for a long time. There were platforms for couch surfing, vacation rentals, etc. But all of them lacked one crucial thing: a seamless and trustworthy experience. That was the gap no one had filled. When a new platform launched, it didn't say, "We invented this model." It said, "We're doing it right." The right was in every detail, from the interface to payments to verification to the sense of safety users felt. Likewise, in the crypto exchange market, dozens of platforms existed before, but none of them made mainstream users feel comfortable. They faced technical barriers, shady environments, and a total lack of support. A new user felt lost in a maze. Meanwhile, the breakthrough product took a different path. Strip everything down. Focus only on the first user experience. No education, no complexity. Just provide the exact action users need and make it dead simple. In online payments, many systems had existed for decades. But the new product didn't compete on scale or legacy. It competed on the sharpness of product design. Instead of serving finance departments, it served developers. Instead of complex paperwork, it offered fast APIs. Instead of targeting big corporations, it focused on growing tech startups. It didn't win by being first. It won by going deep in the right direction. What all successful cases had in common was, they realized the market had players, but none had solved the problem completely. Existing products were half-baked, outdated, or misaligned. Users weren't loyal, they were just enduring. And the moment a clearly better choice appeared, they switched instantly. So the opportunity doesn't lie in being first, it lies in being the first to do it right. Even more importantly, not being the first is a strategic advantage. You can learn from your competitors' mistakes. You can ride on the demand they help cultivate. You can identify exactly what users are still missing. From there, you can build a product that needs no explanation, because the market already understands the concept. Just deliver a faster, smoother, more trustworthy version, and you can fully replace the old options. This is the smart route. No need to invent, just refine. Many people miss out because they think if someone else has done it, there's no room left. But the truth is, users are not loyal to ideas, they are loyal to experiences. If you do it better, faster, lighter, and more user-friendly, even if you're late, you can flip the game. In the world of products, there are no trophies for arriving first, only market share for those who execute best. Remember, the first mover is rarely the final winner. The ones who endure, refine, and truly listen to the market are the ones who stay on top. Part 8. Market potential is always bigger than you think. One of the most common mistakes in evaluating a startup idea is rigidly defining the market. Many people quickly conclude, this is just a small market. But history has shown the opposite. The greatest companies all began in very narrow niches, but thanks to excellent products and deeply rooted needs, the market expanded rapidly in ways no one expected. The limit doesn't come from the market, it comes from the founders' early imagination. A home-sharing platform initially served only one need: finding temporary lodging for conference attendees. The idea was very simple: help a few people rent a place to sleep for a few nights. But once the solution proved successful, users started inventing other uses. They used it for budget travel, for extended business trips, for short-term stays before finding permanent housing. Layer by layer, hidden demands surfaced, and the product evolved in entirely new directions, none of which were part of the original plan. And it didn't stop there. The platform became a livelihood tool for millions. People with spare rooms, idle apartments, or even those who bought property specifically to rent it out. A new ecosystem emerged. Professional hosts, cleaning services, interior consultants, calendar management apps. None of this was in the original business model. It only happened because a good product unlocked economic value for users. And when that happens, the market grows far beyond any forecast. Crypto trading platforms started with one simple goal: make it easy for regular people to buy Bitcoin. But as users became familiar with the process, they wanted more: asset storage, international transfers, trading other tokens, learning about blockchain. Gradually, the platform became a gateway into the entire decentralized finance world. The market wasn't just Bitcoin buyers, it was everyone seeking financial freedom on a new tech foundation. What matters is, even the founders couldn't foresee this. Their initial registration pitch had a narrow scope, but real user feedback, actual usage behavior, that's what revealed the true scale. If they had evaluated the market only based on a limited early vision, the idea would have been dismissed. So the advice is, don't rely too heavily on early market analysis. Trust the pain you're solving. The market will shape itself over time. In online payments, a product was created to help startups integrate payment collection quickly. It seemed like just a technical tool, but when done exceptionally well, it became the standard infrastructure for millions of websites, apps, and service ecosystems. From there, it expanded into fraud prevention, business finance, tax integration, card issuance, and even capital funding. The initial market was developers. The final customers were the entire business world. The profound lesson here is, you can't sketch out your entire future market in your initial slides. Users are always more creative than you think. When they truly love your product, they'll find new use cases. They'll lead you to needs you never predicted. And if you're ready to listen, observe, and adapt, you'll unlock markets that didn't exist when you started. That's why startups must be flexible, not overly attached to initial plans. Instead of asking, how big is this market? Ask, how many people are silently suffering from this problem without help? Because if the pain is deep enough, even a small group of users can drive early growth. And if the solution is excellent, users will naturally refer others. Organic growth is the signal that you're tapping into latent demand. And those demands are always deeper and broader than any market data chart can show. In summary, a startup's potential shouldn't be limited by the numbers in a pitch deck. Don't be afraid if someone says this is a small market. Don't obsess over TAM slides and data summaries. Focus on building the best product for a small group that urgently needs it. When they're happy, they'll bring in a larger market. When you get it right, actual scale always surpasses initial assumptions. And that's the secret behind tech unicorns. Part 9. Execution makes the difference. Ideas alone are not enough. A dangerous yet common mistake in startups is putting too much focus on the idea. The frequently asked question is, what's your idea? But the real question should be, what have you built? Because ideas have no value without solid execution. In reality, most ideas are similar. What creates differentiation isn't theory, it's the ability to bring the idea to life, turn it into a product, and keep it running smoothly at scale. The most successful startups didn't have exclusive ideas. They simply executed better than everyone else. They pushed through stages where others gave up because it got too hard. From product design, the first lines of code, payment integration, legal processing, to customer support, everything had to actually work. No plan is a substitute for real work. No financial model is persuasive if the product can't survive in the real world. A home-sharing platform didn't just need a nice interface, it needed a secure payment system, clear identity verification, transparent complaint resolution. It had to build trust between strangers. It had to ensure that each transaction wouldn't lead to serious risk. These countless small details are exactly what kept users around. Meticulous and consistent execution, not an inspirational slogan, is what creates loyalty. A crypto trading platform didn't just need good design. It had to operate reliably 24/7, handle millions of dollars daily, defend against hacks, and protect millions of users. One small mistake, data loss, transfer error, security flaw, could destroy its reputation. What earned users' trust wasn't a good idea. It was a product that worked flawlessly, reliably, and didn't let users down. That's the pinnacle of technical execution. A developer-focused payment platform couldn't just be a beautiful API. It had to work perfectly across browsers, operating systems, and coding languages. It had to offer clear documentation, fast support, and backing from trusted banking partners. It couldn't make promises it didn't keep. And once a startup delivered all of that, users no longer cared who the founders were, where they came from, or how old they were. They only cared, can this product help me get the job done? Execution is where every idea either shines or gets extinguished. That's why many people start with the same idea, but only one succeeds. Not because they're smarter, but because they did more. Faster, more precisely, constantly improving, fixing mistakes on time, running into issues, but not giving up. When customers encountered bugs, they responded within minutes. When infrastructure overloaded, they upgraded overnight. Behind success isn't inspiration. It's thousands of unseen work hours. In the startup environment, speed is an advantage. But speed only matters when paired with quality. Move fast and carelessly, you crash. Move well but too slow, you get overtaken. Good execution means doing the right thing at the right time with the right people and at full energy. It's not a natural talent, it's a culture. A team that believes in the mission, acts quickly, supports one another, and stays focused on the end user will always outperform any strategy document. Execution isn't just about writing code or building systems. It's about how you handle real-life surprises. A small bug in the user experience can make someone leave forever. A slow response can ruin precious trust. Good execution means keeping promises, even in the tiniest details. It doesn't require flashy words. It needs steady, precise, tireless action. And the best part is, anyone can rise through great execution, even with no advantage in capital, connections, or credentials. Part 10. Don't equate success with fundraising. Users are the true measure. There's a reality rarely mentioned in success stories. Many startups once failed to raise any capital. They were rejected multiple times in the early days, not because the product was bad, but because investors couldn't see what the founders saw. And that's completely normal. People who evaluate ideas often use old frameworks, past experiences, and outdated biases. They're not the users. They don't live the pain. So not receiving investment doesn't mean failure. Conversely, there are companies that raised millions right from the idea stage and still collapse because they didn't solve a real problem. So money is not the standard metric of potential. If a product is loved by users, used daily, shared with friends, and revisited frequently, that is a stronger signal than any funding round. Users don't care how much money you raised. They just want to know whether your product makes life easier. There have been startups labeled too crazy, too small, or too risky by investors. But by persistently building the product, serving users well, listening, and improving step by step, they carved out a growth path without relying on external funding. Success is not defined by how much capital is raised, but by how many people are willing to pay. A startup that can generate revenue early gains resilience, independence, and greater bargaining power in the future. If founders had only listened to investors' opinions, many of today's great companies wouldn't exist. Fortunately, those founders didn't measure conviction by votes in a boardroom, but by actual transactions, user feedback, and the inner clarity that said, "I'm solving a real problem." That's what kept them going through the early void. And when the product got good enough, investors returned. But by then, they were no longer gatekeepers. They were applicants. The sad truth is, many people give up just because they didn't receive validation from investors. But true validation lies in having someone willing to pay for what you've built, not someone willing to write a check. Startup history proves the most resilient companies are those that create revenue early, manage finances well, and don't chase funding as if it were oxygen. Money is just fuel. Users are the compass. Without users, a startup is just a funded idea with no future. Startups don't begin with macro strategy. They begin with a wound. You don't need a grand idea, just a problem you can't ignore. Trust your intuition, the pain you've lived through, the things that make you want to stand up and make it right. Don't wait for validation. Don't wait for investor approval. The user will be the final voice. And if you dare to go first, dare to go deep, dare to persist, you will be the one who rewrites the standard. Because the world doesn't change thanks to those who wait, but thanks to those who dare to begin when everyone else still doubts. Thank you for watching the whole video. Please like and subscribe to the channel so you don't miss the next videos.